Chicago and North Shore real estate prices falling or just shifting? Hey everyone, Barry Newman here, your North Shore real estate expert with over 25 years in the business. Today we're diving deep into the current property pricing trends across Chicago, neighborhoods, and the North Shore suburbs as of June 2025. If you're a buyer, seller, or just real estate curious, this is the video for you. Stick around as we uncover which areas are seeing price drops, what's holding firm, and why these shifts are happening. Let's get into it. Let's start with a bird's eye view of the market. Chicago's market has always been a tale of two cities. On one hand, you've got urban luxury condos. On the other, historic bungalows and mid-tier single-family homes. Meanwhile, the North Shore suburbs present a different picture. A typically stable, family-focused market that doesn't react quite as quickly. In 2025, we're seeing a lot of nuance. Downtown condo prices falling, suburban homes holding or even climbing. Why? Let's break it down. Here are the specific Chicago neighborhoods seeing notable price drops this year. Greektown, prices down nearly 13% for the year over the year. Now, Greektown is just west of 94, very close to downtown Chicago. It's right off Halsted Street. The next area is Ford City, which is pretty far south, and that's seeing a 6.6% decline. Chinatown is off by about 5.3%. Near West Side, down 4.5%, and the South Loop falling about 4.1%. These are all mostly condo areas. There are some single-family homes and bungalows in that area, but mostly condos. Luxury high-rise condos downtown are facing even steeper losses. We're talking 20%, 30%, sometimes even 40% off peak prices. Just look at billionaire Ken Griffin's recent sale. His Gold Coast penthouse sold for 44% less than he paid. That is totally amazing. Let's explore the reasons for this drop. One is overbuilding. There are too many high-end condos in the downtown market. Two, high mortgage rates. Well, that's really the biggest killer of them all. It's hovering over 6.7 to 6.8, and that's killing affordability. Perceived crime. Some buyers are avoiding areas due to safety concerns. There's also a remote work shift. More people are leaving downtown cores, opting for space over location. This confluence of factors is pushing prices down in specific urban zones. What about the North Shore? Well, now let's turn our eyes north. North Shore suburbs like Wilmette, Glenview, Winnetka, Evanston, Northbrook, Deerfield, Glencoe, Lake Forest are largely holding their values or still appreciating. Inventory is still tight, and families are still relocating for schools and lifestyle. Thinking about relocating to Chicago, Illinois, and neighboring suburbs? Well, I've got just the thing for you. My team and I have actually taken the time to create the ultimate relocation guide, which is meant to save you hours of research. And I've linked it down below, from top employees, the best hospitals, and a boatload of other things that you need to know before making the move. The best part of this guide, it's 100% free. That's right, you heard it right from me, 100% free. Just click the link in the description or the top pinned comment, and I hope that helps. In fact, I know it will help. That's a great part of the North Shore. Buyers here are often less rate sensitive. They're cash heavy or refinancing with strong equity. That said, we are starting to see softening at the ultra luxury end. Homes above $2 million are staying on the market longer, and price reductions are becoming more common. Be ready to offer incentives, rate buydowns, closing costs. In the North Shore, still a good time to list. Stage your home properly, price it just under market to attract multiple offers. Consider timing. Summer is peak season. What you need to know. For buyer, opportunities are opening up. In the city, especially downtown, there are deals to be had. Consider fixer-uppers or homes that have lingered on the market. North Shore buyers should be pre-approved and ready to act quickly. Homes priced well are still moving fast. Rates are driving much of today's market dynamic. At nearly 7%, they're affecting monthly payments dramatically. Buyers need to calculate true affordability. Sellers need to recognize the reduced pool of qualified buyers. and mortgage buydowns and ARM loans are back in play. So what can we expect over the next 6 months? Well, city condo prices may continue to dip unless inventory corrects itself. Suburban pricing likely to stabilize, especially in entry-level and mid-range homes. Hey guys, it's Barry Newman. As much as I love making these videos, there is one thing I love more, and that's helping families and people from all over the United States make the move here to Chicago. I've helped countless families make the move. So whether you're coming out next week, next month, or even next year, don't hesitate to reach out. My contact information is right here and linked in the description in case you missed the on-screen pop-up. I look forward to helping you and your family make the move to Chicago. Luxury market will remain slow. Any movement in mortgage rates will directly influence demands. This is not a market crash, it's a rebalancing. City prices soared post-COVID. Now they're coming back to reality. Northshore homes, with their strong fundamentals, are more insulated, but even here, pricing strategy matters more than ever. If you found this video helpful, hit that like button and subscribe for more updates. Got questions about your neighborhood or a specific property? Drop a comment or reach out directly. And remember, whether you're buying, selling, or just watching the market, knowledge is your best advantage. So thanks for watching, and I'll see you in the next video. Have a great day. Bye.